Well, thank you so much, everyone, for joining in for this week's Mortgage Matters here with Chris. Chris, thank you for joining in today. Chris, you and your wife have combined over 50 years of experience in the mortgage industry. You yourself have
Close.
26. So you have
Mhm.
seen a lot and you've helped a lot of people. So we are excited to hear from you on this topic of real estate investing, which is
Yeah.
kind of a buzzword. So we're going to, I guess, pull the veil back behind that. And you have some industry tips to give as well as personal tips because this is
Yeah,
personal to you and your wife. Um,
correct.
I I just want to say that, with school has officially started, that means technically, I guess, the end of summer.
Mhm.
And just the past couple of months here in Florida, our beaches were buzzing with vacationers, and we know a good bit of those vacationers were renting out of places that someone invested in and rented out. So a lot of directions we could take this, a lot of talking points. So let's dive in.
Yeah, excellent. So, I mean, we're talking about, why a lot of people, a matter of fact, I'm actually meeting a real estate agent later today who wants to get into buying either fix and flips and fix and holds and all kinds of stuff. So, investing in real estate, I think they're not making more land, specifically down where we live. We live in paradise. So,
Yeah.
you know, we live by some of the best beaches in the country. But it doesn't matter where you live. There's always an area. Last week or 2 weeks ago, we talked about college towns, how there's properties there that are great for, investments especially if you have kids in college. But there's so many benefits and pros to buying real estate, and there are some cons. So I'll go over both sides to kind of let you know both, because for all the good there is always a little bit of bad too. So I think it's important that you know both. Um, and I know, Mindy, you wanted to talk a little bit about the debt service coverage
Yeah.
ratio and what does that mean. And there's programs out
Yep.
there that are just designed for the debt service coverage side of it. They're called DSCR loans. Imagine that, debt service coverage ratio loans. So basically what that does is it's just covering your expense. So I'll start with that. I mean, so when you're buying an investment property, really what you're looking to do is make sure that you're ahead of the game, right? Whether you're selling that property or you're holding it to rent, you're going to have to mortgage this property. And there's a few rule of thumbs, right? That you want to make sure that the thing is going to generate enough capital, so you're not paying into the property. And there's people out there that will argue this. My wife is one of them, because even if you're breaking even or at a loss, you do have, substantial write-offs, that at the end of the day, you're getting the appreciation of the property down the road. So let's dive in. So,
Yeah. So,
um,
Chris, from the perspective of your average family or average person with a normal budget, most people don't have room in their budget for a whole nother mortgage payment, right? So a lot of people think they can't invest, or at least they can't invest yet, because they'll never, in their minds, they'll never get a mortgage for it because they don't have, I guess, the room in the budget. So can you explain how, um, with something like a debt service coverage loan, it doesn't necessarily count towards your personal debt to income ratio? Explain that to the person who's wondering, I don't have room in my normal budget. How do I do this?
well, I mean, there's multiple different ways to finance investment properties. You can go with your traditional Fannie Mae or Freddie Mac, conventional type style loans, that, you'll have to put down 20%. If you're buying a second home, it's 10%. And then you have to guarantee it with your income and your credit. So you have to have your debt to income work. And that's a standard investment property loan. But now we have different types of loans that are, these debt service coverage loans that will allow people to put their 20% down. And it will factor the house and the money that house will generate for rent as the offset for the payment. So, for example, if you're buying a $500,000 house and you can get $4,000 a month for that house, and the mortgage payment all in is $3,200. I'm just using random numbers, folks, for you guys that are watching. The point that I'm trying to make is, if there's an upside to where the rental income more than covers the amount that has to be paid on the note, then that's what will be looked at to qualify for the loan. We're not looking at your personal income. We're not looking at any of what you've done in the last 2 years on your taxes. We're solely looking at the income that this property is going to produce for you, which is an awesome opportunity for those people that may not have a ton of income to show. Maybe they're self-employed. A lot of self-employed people that I talk to, their bottom line number at the end of the day, even though we all know they're making money, they're using the tax code to their benefit. They show very little because of their expenses that they pay out. And at the end of the day, it doesn't show that they have enough, even though they do, to cover another property or whatnot. So with a debt service coverage loan, it has to be an investment property. So it's a great opportunity for those people that are in those situations, or maybe you have a lot of different properties. I see a lot of real estate investors, their taxes are killed because when they buy these properties, they throw so much money back into the property that shows them a loss at the end of the year, which means they have no income to qualify for a regular standard traditional loan. So let's just talk about a few different things on, why would it be good to think about buying a investment property? I think one thing is, I always would tell someone young, just starting out, I would buy a multifamily for your first property, right? You get the house hack, which means you get to have someone else paying for your mortgage with you, which will offset your payment to a smaller amount. And then once you move out of that, now you have a good 2-family or 3-family investment property that's making you money. And it's very easy for us as lenders and banks to transition you from a multifamily into a single family, or a condo into a single family. Anything that means you're moving up, you're taking the next step up, that helps us, and we can explain, like, they're moving out of their 2-family, but now you're starting out with your first investment property, because the tip one, the first pro of investment property, is passive income. Right. So if you own real estate investment, you get investments in real estate that can provide you a steady stream of passive income, especially through any of the rental properties that you own. And that's just good money. That's just good, makes good sense for people. The second big key of that is appreciation, right? So over time, that property will tend to increase. It's going to increase. Maybe there's a dip in the market, but over time, we're going to see an increase in the value of that property, and it's going to providing a potential for capital gains for you. That's huge. That's another benefit. So the third benefit I would like to talk about is tax benefits. So, depending on what your local jurisdiction is, there could be multiple different tax benefits associated with owning real estate. First one being, right, as many of you guys know who own property right now, on your personal property, you get to deduct the mortgage interest, but you also get to do the property taxes and depreciation. So even if you're a W-2 employee that already had paid in a lot of money, you'll be able to get a lot of money back through this tax benefits that you could qualify for, I guess I'll say. So I'm not a tax accountant, but I'm just sharing with you things that I know that I've benefited from, and others that I know who have invested from. So small little minor disclosure there. But again, these are all things you can look up, or talk to your tax accountant as well. Call me, call your other mortgage bankers out there, that they'll tell you the same things here. But the next thing is diversification, right? It's also owning real estate can be a great way to diversify your investment portfolio, right? What do I mean by that is, right now, when the market's really low, if you got all your money tied into the market, and say by the time you're 60, 65 and you need to pull from that, and we're in a down market at that time, well, that's going to hurt you really bad if the market tanked and now you're pulling money from somewhere that you really should let it sit in there until the market comes back around, because you're down, right? Well, by owning the real estate, you will be able to diversify your portfolio and your investment portfolio. So maybe at that time, if you're really short on cash or you need something, you could sell a property off and put some money in your pocket. Uh, Maybe buy some stocks while they're low. I don't know, but that's just another thing. Next thing would be you're building equity, right? So as you're paying down your mortgage, right? You have a mortgage, let me rephrase that so we can imagine someone else paying that mortgage for you, and
That's
as
right.
they're paying that mortgage for you, you're building equity in that property. So that can actually be leveraged for other investments. Because think about it, that small note, say you buy that investment property for 300 grand, and now we're 10 years down the road, and the rent went up another whatever 10-15%. You have this extra cash because you're still paying on that smaller note. All right, now you have this extra surplus of cash. You can put it in other investments, you can buy other properties, you can do other things. So equity building is huge. You can maybe even take out an equity line because you have it to go buy more property or whatever it is, a business or whatever it is that you want. The
So,
next, oh, go ahead, Bindi.
so when we think of, investing in real estate, what typically comes to mind, the traditional thing is, for long-term rentals. I'm going to get a tenant in here
Yeah.
and have them, pay the rent for a year or something. That's a great way to do it. In places like Florida, we've got more options than that. Florida, maybe nice parts of California, anywhere coastal, right? Or Arizona. That's a big snowbird state. Tell us about other ways that people can be creative with investing in properties that's more than just for long-term renting use.
Just rephrase that one more time just so I can catch that last part. So what are
So,
the benefits where?
so in a place, so these are for our Florida people specifically.
Okay.
We have a destination that people want to come to. They want to vacation
Right.
here.
Yep.
They want to spend winter here because it's not nearly the snowy tundra it is up north, right? And of course, people are moving here to live here. But those vacationers and those snowbirds, they're not coming down here. Usually, not coming down here buying a property. They want to come down here on
What?
vacation.
That's it. Yep.
They get a vacation from someone's
That's
house.
it. They're going to pay somebody. They're going to
Yeah,
pay somebody. And I think I have mixed feelings on that question in one aspect is because, right, when everybody's doing really well, I think you have to, when you're buying for vacationers, you have to be very specific in where you're buying.
yeah,
You want to be in the beach town,
yep,
in the main area, right? Or else when the market's down, the regular folk aren't vacationing as much. Now you're sitting on a property. Now you can go and rent it to someone else. But if you're solely going to rent for vacationers alone, then you want to be looking at those destination places. For example, where we live, we have Anna Maria Island, we have Siesta Key Beach, we have little neighborhoods in those areas. We have golf communities, which is big. People come down with their friends to golf for 2-3 weeks at a time. We live in a place that has thousands of golf courses within 2 different counties. So my vacation places that I buy that are specific for that, I have one by the water. I'm one house right to the water. You see the sunsets dropping over the Gulf. It's unbelievable. Then I have one that's in a really, really good spot in a golf community. It's like one of the number one golf communities in the area. So, I'm never going to have a problem renting those out on the people that are coming down, and I'll get good money on them. There's one property I have that has a dock on the water that goes out to the open water. So that could be a long-term rental for someone who wants a boat. Now, it all depends on what your goal is. Like for my goal is to have a balanced portfolio of properties, right? I want to buy some, I want to sell some of them just to get cash flow because I might get a really good deal. I can capitalize. I want to look at places that are revitalized. One of my properties is over by the airport here that, it's been a rough area, but it's on the rebound and they're doing a lot of work to that area. So my property value should springboard over the next couple of years as they're adding on to the airport. More people are coming here. I'm close to the airport. So I'm always looking at trends of where these places are. I actually bought one that I'm probably going to just flip because it's in a bad part of area, and I see there's other benefits to this one specific property. For me, I'm zoned to put a in-law on it, or I forget the actual term in my head right this minute, but
A
it's
CS, casita. Casita's
yeah,
the
it
right.
allows you to
Yeah.
put another unit on it for, so I could get another additional unit. But, is it worth it for me, or is it better for me to sell? So those are the things that I am going to look at. The last pro before I rip through a few cons before we get into is you get to inflation, you get to hedge inflation. Um,
Mhm.
and what does that mean, right? It's, when real estate is often seen as a good hedge against inflation, because as prices rise with everything else, the value of real estate usually does too. So
Uh-huh.
even in those types of markets where we have inflation, you're going to see an increase in your property value. Now that where you might be short on other things, the cost of other things, that might be a good time to sell a property and cash in and have a big handful of cash at that point to survive. Hopefully you're thriving, or reinvest in something else or another opportunity. But I think it's
So
important. Oh, go ahead, Mindy.
so they're really investing in real estate gives people options, right?
Correct.
It gives them more opportunity or chances for opportunity and more options.
Yes.
So let's dive in then. What are some of the things people need to really watch out for to make sure that they're doing it in a wise way?
Yeah. So that kind of goes into some of the cons,
Yep.
some of the bad parts of it, because these are the things that you got to watch out for. Um, it can be really time consuming. So, owning real estate is very time consuming, especially, in my case, I buy them wholesale, so they need work. But managing real estate can be really time consuming, right? Yeah, especially if you're the one that's dealing with the rental properties. If you're the one that's going to take a call at 11 o'clock at night because there's a clogged sink or whatever it is. Um, and managing tenants, right? I mean, you got to think of all these things, maintaining the property, dealing with legal issues. There's a plethora of things that go along with owning real estate that you have to think about. Do you need to buy it right? So when I use rentals, I want to use a rental agent. I want to use a management company because I'm left-handed and I got two left hands and I got on each hand, I got five thumbs. So what I mean by that is I'm not handy. I don't want to be handy. I'm not going to be the guy fixing it. I'm not going to be the guy mowing the lawns. I'm not going to be the guy doing these things. So I need to make sure I'm buying the property in a way that there's enough money baked in to pay that 10 or 15% fee to a management company that handles that for me. That's going to be important for you to look at that, right? And making sure you budget correctly and making sure you know what the market rents are and where you're buying and things like that. Liquidity, right? That's another thing you got to look at. Real estate is not as liquid as other investments. It's not as easy as just selling it today. Like, oh, it's sold. I mean, there's sometimes you need to sell at a loss. And I've been there. You sell at a loss and you got to move on. You got to be prepared that this is something that you got to pay attention to. It's not something you just jump into and jump in blind. It's also a high entry cost, right? So this is something that you want to do. You need to start putting some money away now. And you also got to think about times when uh, you have a month off of a renter or 2 months off. You got to make sure that there's going to be enough money or you have enough money somewhere to cover those off months, right? So the high entry cost is something to really look at because, real estate often requires a significant upfront investment, which can be a barrier for a lot of people. 20% down on a $500,000 house is $100,000, right? So that's something for you to think about. Maybe you do it with a group of friends. Maybe you get 5 friends and you each throw in 20,000. You go buy one and maybe you flip it and you make 80 grand and you each take $10,000 profit. Hey, that's a $10,000 gain, or you buy, a multi unit and you guys hold it together for 10 or 15 years. You just put your contract and paper on what you're going to do or what the buyouts are for each person. If someone needs to get bought out, terms and conditions. So you have to think about those types of things. Market risk, right? I've been doing this 26 years. I've been buying properties my whole career doing this. I bought commercial properties, residential properties, and whatnot. Real estate markets, as you know that are watching, if you're realtors, and if you don't know, they're very unpredictable. Prices can go up and down just as well. There's various factors that contribute to this, and such as interest rates. I mean, right now we're in a really unique situation to where we're not seeing the prices go down like you would in a normal market, and that's because we have a shortage of homes. We're like 5 million houses short. Our build starts are way down. We have a lot of people who bought a few years ago with low interest rates that aren't selling because they don't want to get rid of that. So this is kind of a different, unique market, I got to tell you. But in a regular, normal market, if you had the spike in interest rates that we had now, you would see a drop in home prices pretty fast because supply demand. Right now, there's a supply demand issue. So we're not seeing that price drop. We've seen a lot of stabilization, which is good, right? Because they were climbing so fast, and you got to think about that. I got two more for you. All right. One is a potential, your potential for negative cash flow, right? And I just said a little bit about that a second ago. I don't know if you heard me slip it in, but sometimes your property expenses can exceed your rental income, and you'll end up with negative cash flow, right? There can be you could have to put a new roof on the house. That's negative cash flow for that year. That might help you on your taxes, but that doesn't help you for now money. So these are the con things that you have to really think about. Because all the good stuff we talked about sounds really good, right? I'm going to have tons of properties. I'm going to sell them 10, 15 years on the road, make hundreds of thousands of dollars. It's the ride going in that you have to pay attention to, and you really need to talk to someone to walk you through these things, to make sure you're making a wise investment. And you got to make sure that you're buying at the right property, the right area. There's a lot of different things to look and think about when you're doing this. But I would love to have a conversation with any of you if you're realtors. Again, I'm meeting a realtor this afternoon who's buying her first flip, and just kind of share with her and actually probably drive her by one of my flips that we literally gutted the whole house in. So it's not for the faint of heart, but if you have some extra money and you want to leverage and diverse your portfolio, real estate. The good thing about it is if you're buying some of these things through some of these other programs, you can always refinance them down the road if the terms are better, and you can save even more money at that point in time. So that's what I have, Mindy.
Well,
I
Chris,
kind of just
these are
fed you with a fire hose of stuffs, but that's
these are all great tips. And honestly, these are the things that people aren't talking about when they talk about real estate investing. So again, we appreciate you pulling the veil back for us and giving us an idea of how people can safely step into it, and build their portfolio and their investments wisely. So Chris, thank you so much for taking the time today. We appreciate it. For those of you who tuned in and it was a fire hose, you can always watch this later, because there are so many good details here that Chris, you shared with us. So you can find us on YouTube. This video will be posted there shortly. You can always watch it again on Facebook. And of course, we are up on your favorite podcast platform. If you like listening without watching, you can find us anywhere there as well. Don't forget to give us a like and give us a follow so that other people can get these tips as well.
Thank you.
Yes. So Chris, we'll be back next week with a new topic for people. And
Awesome.
I hope everyone has a wonderful weekend, and are able to enjoy these last few days of summer if you're up north. Down
Thankfully,
here in
we have
Florida,
365 days of it. So
down here, we're just another happy day. So,
all right. Well,
thank you,
thank you
Chris.
guys. Have a great
See everyone
one. God
next
bless.
week.
And we'll see you next week.
Bye-bye.
Same place. Bye, guys.